With an already high cost of living, consumers are yet to feel the consequence of load shedding, as it has added pressure onto retailers to increase their prices due to increased operational costs. Unfortunately, the consumer's grocery basket is diminishing by the day.
We see that inflation is maintaining, this upward trend, sitting at 7.1% as mentioned. And what we see there is that there's still quite a lot of cost push pressure. So we're seeing that the drive for inflation is really coming from the supply side. And that is becoming a bit of a difficulty for the consumer because it creates shortages in the system and creates a situation where prices do increase. The concerning thing being that essential items are still the ones that are driving inflation the most. So food inflation at 14%, really putting pressure on household balance sheets, transport inflation as well. No one can live without mobility and food. So we are seeing that consumers will then have to sacrifice expenditure in other areas to be able to afford these essentials in the balance sheet. This is then how we get to a point where retail sales starts to move in a negative direction, simply because people's salaries are not maybe large enough to cover all the expenses that are important for them to cover. And we start to then look at where we can cut expenditure to be able to cover the essentials.
With South Africa being a net importer, meaning we import more than we export, South Africa is at the mercy of international prices, and a weaker rand will make the same goods that the consumer generally purchases more expensive.
Locally, the exchange rate has been weakening. So for any goods that are imported into the country, we are going to see those prices continue to rise. So if you just look at the foodstuff component in the trade statistics lately, there's been about a 29% increase just in terms of the cost of, well, not the cost, but the value of imported goods. So the demand is pretty much the same. We're importing the same amount of stuff, but it's coming at that much higher of a price. So the currency is a big concern. More locally, the energy supply is a big concern, and it has been affected just in terms of things like food production. The manufacturing side is having to find solutions for energy disruptions, which is then also influencing in terms of consumer prices at the end of the day.
And the story is no different in the price of petrol.
There's definitely a chance that we'll see a fuel increase or a fuel price increase in May, and worsened by the fact that the currency is also not at a good place. So a higher Brent crude price and a weaker rand combined will just possibly contribute to an increase on that side.
Food and non-alcoholic beverage prices were the highest contributor to the monthly inflation rate, with items like vegetables, oils, fat, bread, cereals, milk, eggs and cheese, hot and cold beverages, alongside public transport and housing utilities, which include electricity prices. Economists are optimistic that the price for vegetables will come down in the short term, but are uncertain of grain, which is used for bread, cereal, rice and corn.
In the coming months, we're probably going to see a bit of better prices for vegetables in general. And then the issue will probably remain on the grain products that are made from your maize, your wheat, and then of course the sunflowers, because of there's still a bit of uncertainty around those. As much as you have seen that the grain deal that are sort of allowed grains to be exported from the Black Sea to the world is still continuing, but there's relatively still some sort of doubt around that. It's not a certain thing. And if you are looking specifically into South Africa, we still see like those commodities that your maize and sunflowers still remain, relatively higher compared to the previous, the same periods we have observed like in last year. So we still gonna be able to see those numbers. And then of course, for animal products, because for animal products now it means because of the commodities like your yellow maize, and the soya beans are used to produce these goods, they are still relatively higher, so meaning it's going to be that cost of feed is going to be transferred to the product, and then of course the consumers are going to be able to sort of see that there's still a bit of that. But I mean, we are optimistic going forward to the next half of the year, but for now things still are kind of not clear because of a number of issues, including the load shedding, of course, and now that's something that is always going to be there, at least in the shorter period.
With the rand above 18 rand to the dollar and inflation still above the 3 to 6% threshold, the Reserve Bank could raise interest rates by another 25 or even 50 basis points as in their previous MPC meeting. Coupled with load shedding expected to reach stage 8 and 11 in winter due to increased demand, it's going to be a cold winter both physically and financially.